Hey there, everyone. Welcome to another Ainslie's Gold Silver Standard Insights, where we break down the morning's news that was posted on ainsleyBullion.com.au. Joined, as always, is Chris Tipper. Hello, Chris.
G'day, Joe.
And joining Chris today, and we've had Alex on before, it's Alex Hutchinson, a wonderful contributor to the show. Alex is one of the directors of Siltec Precious Metals Refinery and also the Australian Minting Company. Hi, Alex. Welcome back to the show.
Hello again, Chris and Joe.
It's going to be great to get your insights on this particular day's news, and I'll share the screen as always. And today's news, entitled, and I love this title in particular, Fed Hawknado. Love that one. Fed Hawknado smashes markets, start of next leg down. Chris and Alex, over to you, please.
Thanks, Joe. It's a great headline. And, well, we warned that everyone needed to be paying attention to what they'd say on Friday during Insight last week. And we were absolutely right. I commented at the time that for the markets to believe Powell that the Fed will actually do whatever it takes, and indeed also believe the other central bankers from around the world who are meeting at Jackson Hole, they wouldn't be able to leave any room for interpretation. That was exactly how they tried to play it. Jerome Powell's defining words were, "We must keep at it until the job is done." And the markets, at least so far, have followed him with significant falls across the board. I was reading commentary in the media over the weekend that this was an attempt by Powell to emulate the words of Mario Draghi from the European Central Bank a decade ago, when he declared to the world that he would do whatever it takes to save the euro, including bailing out struggling governments whose borrowing costs were rising to unsustainable levels. In many ways, it was successful when Draghi did it, as for the most part, another European debt crisis was averted. I think it's highly unlikely, however, that Mr. Powell's words will be as successful as Mr. Draghi's were. He warned that we need to watch out for a hard landing. In other words, he's telling us directly that he's prepared to crash the economy into recession. That's pretty powerful stuff coming from arguably the world's most powerful man in the world. Like in terms of markets, at least, he is the world's most powerful man right now. So my skepticism remains, however, because I think political pressure will continue to grow on governments to spend their way out of recession, especially as the job losses start gaining momentum. So, Alex, where do you see the events of Friday night and the aftermath we're starting to experience in markets today? Like, do you think that this leaves us in a situation where the Fed is going to achieve what it's setting out to? What do you actually think the Fed is trying to achieve here?
Well, I mean, I suppose Powell has been trying to do this for a while. He's been trying to jawbone, so to speak, the US dollar. Jawboning at this time, though, of course, is lifting it because that works against inflation. So he's been trying to do this since about March, very unsuccessfully. Every time he says, we're going to do this, the market reacts with, interest rates are going up this year, but they're going to drop next year because we're going to be entering a recession. We all know right now the US is in a recession and Europe is in a recession. There's all these countries around the world right now in a recession, but Powell is going to stick to his guns. And on Friday, that was the first time that he tried to be as definitive as he could. So there was no room for the markets to react. And he said he will do anything to keep inflation down because he's concerned about the long-term effects of stagflation. So this time we had a huge drop on the S&P and the NASDAQ was down 4%. But even now, you look at the ASX, it's only down 1%. Originally, they were sort of saying 4%. So there's a muted reaction. There's an initial big reaction and a muted reaction. So we're just going to keep seeing stronger and stronger words from the Fed because it's the initial reaction is just muted very quickly by the rest of the market.
Sure. I suppose I've seen a lot of speculation that, you want to make comparisons in situations like this. And a lot of the comparisons have been that we're in the middle of, 2008 all over again, this time potentially without the financial crisis, or at least so far. Others are going further and saying that we're heading straight into the worst of the 1970s. So, there's a lot to process there. Where do you fall on that, Alex? Are these comparisons valid, or is this something completely new that we're experiencing now?
Well, I think if you look at 2008, like you said, it was driven by a financial crisis. This time, it is oil, it is inflation, it's food, it's labor, it's all these things that are more like the 1970s. The 1970s was just an oil shock. So oil drove through a whole heap of other prices. It drove through to food. But what we're looking at the moment is an oil crisis or an energy crisis, because it's mainly gas. Then we've got what is a food crisis, because we've got all these climate issues right now with record heat waves, record droughts, floods all over the world. So that is independent to what's going on in oil. And then, of course, I mean, we've spoken about this extensively. Labour. We've got an ageing population. The productivity is down. The participation rate's down. So we've got three finite resources all being driven up very quickly. And that's why, you look at the 1970s as a comparison. Well, now we've got three items that are just going to drastically change in what productivity, what's available in the market, which will just keep driving inflation. And if you look at the twin oil shock from 73 to 79, specifically for gold, well, it went from $36 an ounce to $306 an ounce in about 6 years. So it's a
pretty big jump, yeah. Wow.
Yeah, and I mean, if Joe can pull up the current Aussie gold price, we had a big drop in the S&P. We had a big drop in Nasdaq. But if you actually look at the Aussie gold price from Friday, we went from about 2,525 down to 2,515. It was a very because the Aussie dollar's dropped on the back of the US, it's just not a big drop. So, gold is being very well supported at the moment, which is great.
Oh, absolutely. I mean, if you think about the safe haven nature of gold, I mean, this is the sort of exact situation why you buy gold, isn't it? There's uncertainty in the market at this level, and that protection that it can provide, I suppose.
Yeah.
The final angle I'd really like to explore with you today, Alex, is around what happens when others don't play the game according to the Fed's rules. It looks to me like China is attempting to stimulate already, and we touched on that recently in Insights. And we've seen more evidence of this in the past week as well. And even the Biden administration is revving up the economy to some degree. I was just reading this morning about the $300 billion they're providing in student loan forgiveness. So where does it leave us when other major players, even your own government, in the case of the US, are pulling in opposite directions to what the Fed is trying to achieve?
So you've hit the nail on the head. What is really interesting, and again, we've spoken about this before, is governments working against the Feds and the Australian government working against the RBA. So you've got Biden, the US has entered what we've deemed a recession. Other people may not have deemed it that way, but we have. And so you've got Biden trying to spend his way out of it. And then you've got the Fed with this massive inflation trying to drive it back down by raising interest rates. And that's part of the speculation around that interest rates will have to be lowered next year. But what's really interesting at the moment is on Thursday, there was a big spike in the US dollar. So, a big drop in the US dollar. So it's done exactly what the Fed does not want it to do. And it was purely on a rumor that China was about to announce a big infrastructure spend. So rumors now are driving this. But what's even more interesting about that is you've got the two biggest superpowers in the world trying to get a different outcome for the US dollar, because China's dollar is pegged to the US dollar. So, we've got a war, a currency war on one currency right now with the two biggest economies in the world. And so my weird speculation on this is, if we were actually to look at Russia, if Putin wanted to be a bit clever about things, if he was just to stop the war right now, the euro bounces back up, the US dollar is driven back down, you'd be looking at huge inflation in the US, because there'd be a massive drop in the US dollar, which is exactly what the Fed is trying to avoid. So you've got these you've got the government, the US government, you've got China, you've got big superpowers, you've got big governments working against the Fed, and then you've got a dark horse that you don't know what shock's going to happen in the world that may just push it the other way.
I have to admit, I hadn't even considered the impact of Russia playing the game as well, but that's exactly right, isn't it? You've got, there's an assumption here that the US is are the only game in town, and they're the only ones that are making the rules, and everyone else falls in line. But the reality is we've got a lot of sovereign nations around the world who are going to make independent decisions in their own best interest. And yeah, that's not necessarily going to align with what Mr. Powell wants.
No.
That's why we have you on the show, Alex, for those little that I didn't, just like you, Chris, I didn't even factor that in. And that's one of the exact reasons why we love having you on the show. Any final comments from either of you before we do the wrap up?
I think my dark horse was enough.
Yeah, I'll definitely be spending a bit more time thinking about that one. I quite like that.
Absolutely. Well, thank you so much again, Alex, for joining us. And thank you, Chris, as always. And if anyone has any questions for GSS Insights, we do this Monday to Thursday. Of course, you can head over to the Discord channel, discord.gg/gold. You can send an email to insights@goldsilverstandard.com. When we upload this video today, one or more of us will be on the Discord channel to keep the conversation going. So do that. So join us there, of course. And lastly, always like to make a little plug for the goldsilverstandard.com website, because it brings gold and silver into the digital world. It is fully backed with real physical gold and silver digital tokens. So digital gold, digital silver, backed by real physical metal. So if you want to play both worlds, the digital asset space and the physical space, here's the perfect way to do it. Thanks once again, Alex. Thanks, Chris. And as we say always here at GSS Insights, balance your wealth in an unbalanced world. Take care, and we'll see you next time.